There's a moment in every bubble when everyone knows it's getting expensive, and nobody cares because this time feels different. Right now, billions of dollars are flowing into AI. Stock prices are surging. Companies are being valued not on what they earn, but on what they might become. And if that sounds familiar, it should, because we've seen this before. Late 1990s, the internet was the future, and every company with .com in its name was suddenly worth a fortune. It didn't matter if they made money. It didn't matter if the business model worked. What mattered was the story. A new technology, a new world, a new economy. And today, AI is playing that role. The promise is massive. Automation, productivity, a complete shift in how businesses operate. And unlike the early internet, AI already works, which makes this moment even more convincing. Now look at what's happening in the market. A small group of companies are driving most of the gains. Names like Nvidia and Microsoft. Their valuations have exploded. Investors aren't just buying earnings, they're buying dominance. The belief that these companies will control the future of AI. And when that belief spreads, money follows, fast. But here's where things start to get uncomfortable. Because markets don't just price reality, they price expectations. And expectations can run far ahead of what's actually happening. In the late 90s, internet usage was growing, just like AI adoption is today. But stock prices were growing much faster. At the peak, many companies were valued at levels that assumed perfect futures. And when reality didn't catch up, the correction was brutal. The Nasdaq fell nearly 80%. Trillions disappeared. Now here's the key question. Is that happening again? Not exactly. Because today's leading AI companies actually generate massive revenue. They're not empty promises, they're real businesses. But that doesn't mean prices can't overshoot. Because the mechanism is the same. A powerful technology combined with unlimited optimism. Now add another layer. Competition. In the .com era, hundreds of companies entered the space. Most didn't survive. Today, the barriers are different. AI requires data, infrastructure, compute power, which concentrates power in fewer hands. That's why companies like Nvidia dominate critical parts of the ecosystem. But even concentrated markets are not immune to hype. Because the story isn't just about who wins. It's about how big the prize becomes. And right now, that prize is being priced as enormous, almost limitless, which brings us back to the uncomfortable math. If expectations are too high, even strong companies can disappoint. Not because they fail, but because they don't grow fast enough to justify the price. And when that gap appears, the market adjusts. Sometimes slowly, sometimes all at once. AI will change everything. That's probably true. But the timing, the scale, the winners, those are far less certain. And uncertainty is where bubbles form. Because people don't price what they know, they price what they imagine. Now zoom out. This isn't just about AI. It's about a pattern. New technology emerges, capital floods in, valuations expand, and eventually, reality catches up. Or prices come down. Sometimes both. So are we reliving the .com bubble? Not exactly. But we're definitely rhyming with it. That's what makes this moment so interesting. Because the technology is real, the opportunity is real, but so is the risk of getting ahead of ourselves again. So the real question isn't whether AI changes the world. It's whether the market has already priced in a future that hasn't happened yet. And if it has, what happens when expectations meet reality?